All right, so hey everyone, welcome back to the deep dive. You're probably here because, well, let's face it, the whole U.S. tariff thing is back in the news, and yeah, it's kind of confusing trying to figure out what it all means, especially for us here in Canada.
Yeah, for sure. It's a lot to unpack, right? We had the big announcement from President Trump, with his Liberation Day, tariffs and everything on April 2nd. But the thing is, Canada and Mexico, we were basically left out of that round of tariffs.
That's good news, right?
Yeah, I mean, on the surface, it seems like we might have dodged a bullet. But the thing
There's
is,
always a but, right?
exactly, there are still tariffs, from before that are still in effect. And then there's the whole question of, what this all means for the Canadian economy, jobs, trade, all that.
So basically, we can't just breathe a sigh of relief and move on.
Nope, not quite.
All right, well, let's dive into all this then. We've gone through a ton of reports,
Mm.
news articles, analysis from economists, the works. We've got stuff from Morningstar Prime Minister's website, CBC, RBC, Binomo, CIBC. I mean, the list goes on.
Yeah.
And it's all focused on what went down in early April 2025.
Right, a lot happened.
Yeah, a lot happened, and it's all pretty important. So
Yep.
our goal here is to break it all down, make sense of it all,
Yeah.
and hopefully give everyone listening a better idea of what this means for the future of Canada's economy.
That's the plan.
Okay, so first things first.
Mm.
Let's talk about those new Liberation Day tariffs.
Right. So, like I said, Canada and Mexico got mostly exempted from these new reciprocal tariffs, which, got a lot of people off guard.
So what's the deal with this mostly exempt thing? Does that even make sense?
Well, yeah, it does. It means that while we're not directly hit with these new tariffs, there are still other tariffs, ones that were already in place that we still have to deal with.
Okay, so we're not totally off the hook then. Can you remind us what those existing tariffs are?
Of course. So first off, we have that 25% tariff on any goods that don't comply with the USMCA.
USMCA.
Yeah, the United States-Mexico-Canada Agreement.
Yeah.
Our free trade deal.
Right.
And this particular tariff, it's all tied to those border security issues that keep coming up. Fentanyl trafficking, migration, that whole thing.
Right.
Then there's a 10% tariff on energy products and potash. And of course, we can't forget about those 25% tariffs on steel and aluminum that were put in place a while back. Those are still hanging around.
And what about the auto sector? That's a pretty big deal for Canada, right?
Huge. Yeah, absolutely. As of April 3rd, so just this past Thursday, a 25% tariff on automobiles kicked in. This one's a bit tricky, though. It actually targets two types of vehicles. First, there are the vehicles that technically comply with USMCA, but they've got a lot of parts from outside the US and Mexico. And then the tariff also hits vehicles that don't meet USMCA standards at all.
So even if we play by the rules with the trade agreement, there are still these extra hurdles.
Yeah, basically.
Yeah.
And just to add to that, we're also expecting tariffs on auto parts to come into effect by May 3rd, although there's a chance that parts that are USMCA compliant might get exempted later on. But still, it's a lot for the auto industry to handle.
Makes sense. So, okay, we've got a good grasp on all these tariff pressures. Now let's get into what the experts are predicting for Canada's economy. We've got a whole bunch of different opinions here, and it's a lot to take in.
Yeah, there's a lot of different takes.
Where do we even begin with all this?
Well, how about we start by looking at the bigger picture? Charles St. Arnaud over at Alberta Central, he's saying that even though we dodged these new tariffs, there's still a chance we could get hit indirectly.
Indirectly.
He's worried about a global economic slowdown, possibly even a recession. And if that happens, demand for commodities is going to drop, which is a problem for Canada since, we export a lot of commodities.
Oh, yeah, that makes sense.
We're already seeing signs of this, too. Oil prices have already dipped by about 7%.
Not good.
Not good at all. And this would mean a negative terms of trade shock, especially for the provinces that rely heavily on exporting commodities.
So even if we're not getting hit directly with tariffs, a weaker global economy is still bad news for us.
Exactly. It shrinks the market for what we sell.
Got it. So what about the direct impact of those tariffs that are already in place?
Well, St. Arnaud thinks those tariffs on steel, aluminum, and the non-USMCA compliant autos, those are going to hurt manufacturing in Ontario and Quebec pretty badly.
Because they're so tied to those industries.
Exactly. And his biggest worry is that the U.S. or even the whole global economy could slip into a recession. And if that happens, demand for Canadian products is just going to plummet across the board.
Double whammy, basically.
Yep, direct tariff pressure and then weaker global demand.
All right, well, let's see if anyone's got a more optimistic take on all this. Sal Guattieri from BMO Capital Markets. He actually used the word relief when talking about Canada and Mexico.
He did, yeah. He's estimating that the average tariff on Canadian goods going to the U.S. might only go up by about 7 percentage points.
Only 7.
Well, relatively speaking. It takes into account an estimated 12.5% tariff on vehicles, and then you factor in the tariffs on other sectors, and it turns out it's not as bad as they initially thought.
Okay, so maybe a little less doom and gloom than we thought.
Potentially. But he's still cautious. He pointed out that there could still be tariffs coming down the line on lumber and pharmaceuticals.
Which would obviously bump that average up.
Yeah, for sure.
All right, well, let's keep looking for those silver linings. Bradley Saunders at Capital Economics, he also said that Canada got off much more lightly than we feared. What's his take?
Saunders thinks the import-weighted U.S. tariff on Canada could be around 8%. And he even thinks it might drop below 5% pretty soon.
Wow. Okay, that's a lot lower than what we were hearing before.
It is. He's really stressing how important that USMCA exemption is. He's assuming that something like 80% of our exports will actually meet those requirements, which helps a lot.
So basically, the more we can comply with USMCA, the better off we'll be.
Exactly. And he breaks it down even further. He says the tariffs on vehicles, steel, and aluminum each add about 1.5 percentage points to that overall average tariff rate. So each one individually isn't a huge hit.
Okay, so it's more like death by 1,000 cuts than one big blow.
Yeah, something like that. But even though he thinks we might avoid a full-blown recession, he's still calling the economic outlook gloomy. He's worried about the drop in consumer and business confidence, and he's not thrilled about the impact of those vehicle tariffs. He's actually predicting that Canada's GDP growth is going to be under 1% in the second half of 2025.
So not great, but not a total disaster.
Pretty much sums it up.
All right, Andrew Grantham at CIBC Economics, he's also being pretty cautious. He said no news was good news, but, he emphasized the relative part of that. What's he getting at?
Well, his main point is that this whole exemption from the new reciprocal tariffs, it seems like it hinges on Canada keeping those fentanyl and immigration tariffs in place at the border.
So if we try to ease up on those, we could get hit with those reciprocal tariffs.
Exactly. And he pointed out that the U.S. said something like 38% of Canadian exports were USMCA compliant in 2024.
Right.
But they think that number is going to jump up pretty quickly now that there's a big financial incentive to meet those standards.
Right, so everyone's going to be scrambling to get USMCA compliant.
For sure. But like a lot of the other economists, he's still really concerned about those existing tariffs on steel, aluminum, autos, lumber. That's a major vulnerability for Canada because we depend so much on the U.S. market for those things.
Okay, so yeah, the underlying problems haven't gone away. Now, Royce Mendez at Desjardins Capital Markets, he actually sees a potential short-term advantage for Canada and Mexico. How's that possible?
Well, he's saying that if Canadian and Mexican producers can increase their compliance with USMCA, and if both governments can make things run more smoothly at the border, we could actually end up gaining market share.
From other countries that trade with the U.S.
Exactly, because they're the ones getting hit with these new tariffs.
That's actually pretty clever.
And this is making him think that the Bank of Canada is probably going to hold off on cutting interest rates this month unless the markets really tank. He's also pointed out that globally we're seeing a big shift. He thinks the U.S. tariff rate could end up being the highest it's been in a century.
Wow, that's a lot of historical context.
Yeah.
So yeah, this is definitely a global issue. Now, Mathieu Arsenault at National Bank of Canada, she also said Canada and Mexico were largely spared. What are his main points?
He's also suggesting that those border security tariffs might end up getting replaced with a 12% reciprocal tariff on goods that aren't USMCA compliant. And he's highlighting that about 40% of our exports already meet USMCA standards.
Wow.
And he thinks that could double as businesses adjust.
So basically a lot of room for improvement there.
Yeah, a lot of potential. So he doesn't see a ton of exposure to new tariffs aside from the steel, aluminum, and auto sectors. But he is warning that this relief might be short-lived because of the risk of a global slowdown or even stagflation in the U.S. He still thinks Canada's economy is going to slow down throughout 2025.
So again, it's all tied to the global situation. Okay, Claire Pham from RBC, she also acknowledged the positive side of a smaller tariff increase for Canada. What's she worried about, though?
Her concern is that even if the tariffs aren't directly targeting Canada, they could still shrink the overall U.S. import market, which would obviously be bad news for us.
Right? Smaller pies, smaller slices for everyone.
And she's also anticipating more trade-related announcements from the U.S. And of course, there's always that risk of disruptions to supply chains.
Fun times. All right. Tu McGeehan at RSM Canada. She called this a small consolation prize. Why's that?
Well, she's using that term because while Canada got a pass this time, the U.S. basically hit everyone else with tariffs. So it's good news for us, but not exactly great news for the global economy.
Right, so it's kind of like winning a game where everyone else loses.
Kind of, and she thinks the Bank of Canada is probably going to keep interest rates where they are for now because there aren't any new tariffs on Canada and inflation is still a concern. She also thinks Canadian businesses might react to all this by trying to become more USMCA compliant and by looking for new markets outside of the US.
Makes sense, got to diversify.
Exactly. But she also emphasized that those existing US tariffs are still a problem. And she doesn't think Canada's response this time is going to be as strong as it has been in the past.
So maybe a bit more measured this time around.
Yeah, seems like it. Okay, so Derek Holt at Scotiabank, he had a pretty interesting way of describing all this. He said Canada and Mexico are bobbing away in frigid waters. What did he mean by that?
I like that visual.
Right. So his point is that even though we dodged the new tariffs, we're still vulnerable to those existing tariffs on auto, steel, and aluminum. And then there's the whole global economic slowdown, the fluctuations in commodity prices, the volatility in the markets. All that is going to affect us too. And those border security tariffs are still there too. He's not expecting any major changes to Canada's economic outlook because of this specific announcement.
It's like we're in a leaky boat, but at least we're not sinking.
Something like that. All right, so lastly, we've got the analysis from TD Economics led by Beata Caranci. What's their take?
They always have good insights.
They do. So they're emphasizing that for Canada, there's basically no change compared to what was already announced. Those existing tariffs are still the main problem. They estimate that about 40% of Canadian exports are currently meeting USMCA requirements, but they think that could go up to 80–90% as businesses adapt.
Wow, that's a big jump.
It is. And they're saying that the effective tariff rate on Canadian goods going into the U.S. is now around 10%, which is way higher than it used to be before Trump.
Yeah, tariffs have definitely become a bigger part of the equation.
Absolutely. And they think the Bank of Canada is going to be watching inflation and how the Canadian government responds to all this, but they don't think the bank can really do much to fix the problem. They're actually expecting interest rate cuts of at least 50 basis points to make it easier for people to borrow money.
So basically, they're trying to soften the blow.
Yeah, that's the idea.
Okay, so big picture, we're breathing a sigh of relief that we dodged these new tariffs, but we've still got a lot to deal with those existing tariffs and the whole global economic uncertainty thing.
I love uncertainty.
So let's talk about how Canada is responding to all this. Prime Minister Carney announced some new countermeasures. What's the plan?
Yeah, so he's directly targeting those new auto tariffs with some countermeasures of our own. First off, we're putting a 25% tariff on fully assembled vehicles imported from the U.S. that don't meet CUSMA standards.
CUSMA, that's the Canadian version of USMCA, right?
Exactly. Same agreement, different name. And then there's also a 25% tariff on the parts of U.S.-made vehicles that come from outside of Canada and Mexico, even if the vehicle itself is CUSMA compliant.
So we're hitting them where it hurts.
Basically. And to top it off, all the money we get from these new tariffs is going directly to support Canadian auto workers.
So it's not just about retaliation, it's about supporting the industry.
Exactly. And the government's also planning to create some kind of framework to encourage more auto production in Canada and attract more investment.
So kind of a long-term strategy there.
Exactly.
Now, these new measures are in addition to all the other support the government's already announced, right?
Right. So we've got that temporary waiver for the EI waiting period,
Yeah, being
employment insurance, the financial support for people who lose their jobs.
Right.
And they've also suspended some of the rules around severance pay that can affect EI eligibility, made it easier to qualify for EI. And they've let businesses defer their corporate income tax and GST, HST payments, which frees up a lot of cash for them. It's estimated to be around $40 billion in liquidity.
Wow, that's a lot.
It is. And they've also set up a new financing facility for businesses and increased funding for regional development agencies across the country.
So a lot of different ways to try and help businesses and workers weather the storm.
Exactly.
And it's important to remember that Canada already had tariffs in place on a bunch of U.S. goods before all this, right?
Oh, yeah. Back on March 4th, Canada put 25% tariffs on $30 billion worth of U.S. goods. That was a direct response to those U.S. tariffs tied to border security.
Right. Yeah.
And then on March 13th, Canada implemented almost $30 billion in tariffs on U.S. steel, aluminum, and other things, basically matching the U.S. tariffs dollar for dollar.
Tit for tat.
Exactly. And now with these new auto tariffs, the total value of Canadian tariffs on U.S. goods is a whopping $95.4 billion.
That's serious money.
It is. So yeah, we're definitely not just sitting back and taking it.
Good to know. So let's shift gears and talk about the impact on jobs in Canada. We've seen some pretty worrying numbers lately.
Yeah, we have statistics. Canada just released their report, and Canada lost 33,000 jobs in March.
Ouch.
Yeah, it's the biggest monthly job loss since January 2022, and the unemployment rate went up a little bit to 6.7% from 6.6%.
So not a huge jump, but still not good.
Definitely not. And the really concerning part is that we lost 62,000 full-time positions, and that was only partly offset by an increase in part-time jobs.
So basically people are losing good, stable jobs.
Exactly.
Which sectors were hit the hardest?
Wholesale and retail trade took the biggest hit. They lost 29,000 jobs. Information culture and recreation lost 20,000 jobs. And agriculture lost 9,300.
So a pretty wide range of sectors.
Yeah, it's not just one industry that's hurting.
Are economists connecting these job losses to the trade war with the U.S.?
Absolutely. James Orlando from TD Bank, he's saying that these job losses are directly tied to the uncertainty caused by those U.S. tariffs. He's especially worried about those private sector full-time jobs.
Because those are the ones that are harder to replace.
Exactly. And we've got real-world examples of this, too. Stellantis, they announced a 2-week shutdown of their assembly plant in Windsor because of the tariffs. That's going to affect about 3,200 workers.
It's a big deal.
It is. And even in Quebec, the unemployment rate went up to 5.7%. So yeah, it's pretty clear that this trade dispute is hurting Canadian workers.
All right, so this isn't just a Canada-U.S. problem. This is part of a bigger shift in the global economic order, right?
A lot of analysts are saying that, yeah, Adam Posen, for example, he's saying that America's allies are basically trying to make their economies less dependent on the U.S.
America-proof their economies.
Exactly. He thinks it's because trust has eroded and there's this feeling that the U.S. is only looking out for itself in the short term. And he thinks this could lead to Europe and the U.S. going their separate ways when it comes to economics and security.
So a pretty big rift forming there.
Potentially. And we're seeing other countries and regions taking action too. The EU is getting ready to retaliate against those U.S. tariffs on steel and aluminum. And they're also figuring out how they'd respond to any broader tariffs that might be coming down the line.
So everyone's getting ready for a fight.
Basically. And here in Canada, Prime Minister Carney basically said that the days of being super close with the U.S. economically, those days are over. He said Canada needs to fundamentally reimagine our economy, so we're not so reliant on the U.S.
Strong words.
They are, and Canadian business groups are echoing that sentiment. We've seen statements from groups like the Edmonton Chamber of Commerce saying the same thing.
So it's not just the government. This is a widespread feeling.
Exactly.
Now, here's an interesting thing. The U.S. dollar has actually been weakening against other currencies lately. That's not what you'd usually expect when a country imposes tariffs.
Yeah.
Right?
You're right. Usually you'd see the currency of the country imposing tariffs get stronger. Analysts are saying this is happening because the markets think the U.S. might be losing its grip on the global economy.
So, like, they're not the big dog anymore.
Basically. One strategist at Macquarie even talked about a loss of American exceptionalism. And in the short term, the expectation is that all these tariffs are going to lead to higher inflation and slower economic growth globally.
So not great news for anyone, really.
Nope.
All right, well, it seems like Canada's got a lot of work to do to figure out its economic future and all this.
Yeah.
Are there any specific strategies being proposed?
Definitely. Matt spoke over at the Hub. He's got a pretty radical idea. He wants to slash the federal corporate income tax rate all the way down to 5%.
Wow, 5%. That's a huge cut.
It is. His thinking is that if we do that and if the provinces follow suit, Canada will have the most competitive tax environment in North America.
Which would attract a lot of investment.
Exactly. And it would make it less appealing for businesses to move their operations to the U.S.
So it's a bold move, but it could pay off.
We'll see. Now, Tamer Zaman over at Investment Executive, he's saying that Canada needs to ramp up its efforts to diversify its trade. We've got those agreements in place, like the CPTPP and the CETA. We need to make better use of them.
So basically not putting all our eggs in the U.S. basket.
Exactly. And he's also talking about the need for alternative financing options like private credit and structured trade finance. And he's saying that risk management is going to be even more important as we move into these new markets. He pointed out that 63% of Canadian exporters are now prioritizing markets outside the U.S. That's up from 41% just last year.
So a big shift in mindset there.
Yeah, definitely. And RBC Thought Leadership, they're calling for a full-on economic and trade reboot. They're saying we need to find new allies and trade partners while still keeping things good with the U.S.
Basically hedging our bets.
Yeah. And they're also saying that Canada has a lot of opportunities in sectors like energy-critical minerals, agriculture, and manufacturing. But we need to make some big changes domestically to attract investment. We need to be more competitive on taxes regulations. We need to get rid of those interprovincial trade barriers and make it easier to get permits.
So a lot of homework to do.
Well, a lot.
All right, so it sounds like the main theme here is that Canada needs to make itself more attractive to the world, and we need to get over our dependence on the U.S.
Yeah, basically, we need to be more resilient, more diversified.
So to sum all this up, we dodged those new U.S. tariffs, but we're still dealing with the old ones. And the global economy is a mess thanks to all this trade uncertainty. The Canadian government's trying to help with countermeasures and support programs. But economists and business leaders are saying we need to make some big changes to adapt to this new world order.
For me, the biggest takeaway is that even though this latest round of tariffs didn't hit us as hard as we thought, the long-term implications are huge. We need to rethink our economic strategy, and we need to do it now.
Absolutely. And everyone listening, you need to be aware of all this. It's going to affect your business decisions, your career choices, your understanding of what's going on in the world. So here's something to think about. Prime Minister Carney basically said that the old Canada-U.S. economic relationship is dead. So what do you think Canada needs to do to build a stronger, more independent economy for the future? A big question, and there are no easy answers.
But it's a question we all need to be asking ourselves.
Exactly. All right, well, that's all the time we have for today's deep dive. I hope you found this helpful, and as always, thanks for listening.
Thanks for having me.
Take care. You too.